All right, I'm back. I think John stepped away. He could probably hear us though.
So are you recording these?
I am recording them, but you know me, I'm really bad about uploading. I think I'll upload this one though. I think this is like a good intro to what's going on. You know?
So you're just gonna edit it and
yeah, I'm probably going to put up some of the research that I've done. You know, since the cameras aren't rolling and it's just audio right now, I might do that, slap it on YouTube, take out the audio and put it onto whatever audio platforms that I have.
How are you in terms of views?
Views? I haven't gotten too many views. I also haven't really publicized it, but with this Clubhouse situation, I think there's a lot of potential there. A lot of potential.
That was the original thesis. We were gonna like record all these things, strip out audio, podcast it.
Yeah, that was the original thesis. I'm not gonna lie. Some of the stuff I talk about, I know sounds crazy, and I don't want to attract the wrong type of audience. And I did have some worries that I would get shadow banned. Maybe. Because some of the stuff that I talk about has a tendency to get shadow banned.
You meant on YouTube?
On YouTube, yeah. But probably other social medias. So, I don't know. We'll see. What were we talking about? That completely interrupted my train of thought.
Shit, I don't remember.
Yeah. Probably Citadel.
I mean, so to summarize, I guess, you know, you see a lot of suspicious things.
Yeah.
You combine it together, and you're like, "There's something going on here."
Yeah.
I mean, I agree with you. Some of the stuff is suspicious or can be suspicious.
Yeah.
But my view is when you multiply probabilities of suspicion, it reduces the probability. It's more likely something else. It doesn't compound. It just decreases with each new suspicion.
Yeah, but that's your multiplying, John. I'm adding.
Well, then, yeah, I mean, that's why you're at over 100%. So,
well,
so I mean, it's fine to be skeptical, and maybe this is like, maybe you're right, right? I think kind of in general, you've got a good pulse on like things.
Random shit.
Yeah, because you're also like combing through the web, right? But that doesn't mean then to like go all in on it or you know, think that the whole world is like doing something crazy. I just feel like, okay, maybe some part of the world is doing something crazy.
Yes.
And then maybe you can hold it for some part of your portfolio, but the inverse I don't think is a good thing.
I see. Yeah, so full disclosure, Mike, I'm all in on this. Every single red cent that I have is in GameStop.
As Wu-Tang said in Chappelle's show, you gotta diversify your bond.
I know it's irresponsible, but
well, do you mean 100% of investable assets or all assets?
Investable assets, yeah. Like I haven't sold my house and my car,
right?
You know,
so that's not bad. You can still buy lunch outside or something,
right? You know, I have no debts. I have food. I have a house. So if I lose everything in the stock market, relatively speaking, it's going to suck, but I'll be all right. That being said, I personally obviously don't think that I'm wrong about this. But you got to do your own research, you know.
I forgot who it was that said this. John might know. Some investing legend, not Buffett. He said, you know, the market can be irrational longer than you can remain solvent.
Mm-hmm. Well, that's the nice thing, is that I have no debt. It costs me nothing to hold shares, but it does cost short sellers something to hold shorts.
Remember, it costs you something to hold shares, right?
Say again?
It costs you opportunity cost.
Oh yeah, opportunity cost. Yeah, that's true. So I've seen other stuff go up and down. Oh, I remember what we were talking about before the interruption. Yeah, you're right, but I don't really care about it. I personally don't care about it. Other people do, and I'm not telling anybody that they should buy into this. I'm just saying that I'm all in. I'm at this point. I'm convinced that there is a lot of corruption here, and that this thing's going to unwind eventually, and it might be soon. So I'm all in, but I'm not telling anybody that they should go all in. Obviously, it's illegal to do so. I cannot give investment advice. I can only try to bring out the information that I've spent a lot of time researching and say there's a chance, I don't know how big, that this could have much larger implications on other investors. And it already has. So at the end of January, there were a lot of pump and dumps, and they seemed very egregious. A lot of news agencies were saying buy SLV, and Citadel was one of the largest holders of SLV. What did SLV do? It pumped up really high. I had some positions in silver from a ways back that, months ago, I had been talking to John and Matt about precious metals. And I tripled my money on it. So I'm like, I don't trust this. I'm going to sell. So I locked in my profits. What happened almost immediately after that? The market dumped hard. And people lost a lot of money. After SLV, it was marijuana stocks, Tilray, a bunch of other related symbols. Rocket Mortgages, same thing. SKT, same thing. A bunch of companies. And all these news agencies, the one thing in common was forget GameStop, forget AMC. This is what Reddit is interested in next. But if anybody actually took 2 seconds to actually go on Reddit, you would see all of the posts saying, don't buy SLV. Nobody is interested in SLV. Citadel is long on SLV, SKT, Tilray, Rocket. So it's a pump and dump. They're trying to raise money because they're fucked. That's what Reddit was saying. The other thing is that, remember, probably 7 million new members that joined Wall Street Bets. A lot of them. Maybe not the majority of those 7 million, but enough active new users were shills and bots, most likely, from the behavior that we were seeing. And not a lot of people went over to r/GME or r/AMC or any of the other subreddits that have that popped up after the situation. Speaking of Reddit, all the moderators of Wall Street Bets got kicked out. The original moderator came back. He made a deal with Hollywood to make a film. Probably got paid a lot. And then the new moderators, they were instantly deleting anything positive about GameStop and AMC. Even legitimate research, even data, anything that gave anybody any hope about GameStop got instantly deleted. Very
Yeah, so now here's the thing about the moderation, right? Is what they're doing legal.
Right. Yeah. So in the first congressional hearing, the CEO of Reddit, he said something that I don't entirely believe, probably because it's still under investigation, but he said that he did not, or they did not detect any fraud. But the CEO of Golden Capital did say one thing. He said that he was bombarded with anti-Semitic comments. And the Reddit CEO said that they did a little digging into this. They found one comment that had no upvotes and was deleted within minutes that was anti-Semitic in nature.
Okay, so it's possible that, well,
It's possible it's an ongoing investigation and they haven't proven fraud yet, right? Because you have to prove that they've been hired by Wall Street. But there are screenshots of private messages saying, hey, we'll pay you X amount of money per downvote and X amount of money more for comments, and this much more money if you come up with DD, due diligence, against GameStop or AMC.
Yeah, that's so on both sides, right? The Reddit CEO, this is not a person I dislike.
Mm-hmm.
I don't really have too much feeling towards him, besides the fact that he's married to Serena Williams.
Oh, I didn't know that. Interesting.
Reddit CEO is married to Serena Williams, right?
Cool. I think so, yeah.
So
yeah, that's right. Alexis.
Anyways, for him to make the actual comment that there was no fraud that they found, he's I don't know, he's not an SEC investigator.
Yeah.
I don't know how he could say that with such.
No. He's saying about Reddit itself. I might be misremembering and I could be misquoting. You'd have to go back and check.
Yeah. So he still isn't like a.
Yeah.
I mean, he's not an investigator, right? You need somebody with authority in that situation to say, like, yes, there's no fraud within Reddit, in which case, fine. So he's thinking outside of his lane there.
Yeah, maybe.
Or he could be paraphrasing from someone that did investigate, in which case we don't know. Right?
Or it's an ongoing investigation and they haven't found enough evidence to prove anything one way or the other. Or he's lying and he just wants people to keep visiting Reddit and to trust Reddit. The controversy.
He doesn't seem like that kind of
person. Advertising. Yeah, I'm just throwing shit out there. I don't know either. I'm just spitballing here.
And then for Melvin to say like that guy's been bombarded with anti-Semitic messages, it's like, well, that's like kind of an easy thing to validate. So it's such a dumb thing to lie about. Not that people do dumb shit all the time.
Yeah.
But I'm not sure this is the hill you want to die on, right?
Right. I mean, I'm sure he's gotten that throughout his life. I don't agree with it, obviously, right? Anti-Semitism is wrong. But when the Reddit CEO says that, well, we checked Reddit, and his allegations that he was receiving a lot of anti-Semitic comments from Redditors, we can't corroborate that because there was only one comment. It lasted for a couple minutes before being found and deleted immediately. And so basically nobody saw it.
So if Reddit is saying, obviously we looked into this and it's not true, it's like, there you go, right there. It's a dumb thing to lie about. Somebody with authority within the company that has all the data says it didn't happen.
He was just trying to gain sympathy, I guess. I don't know. There's a rumor, I don't want to talk about rumors, but there's a rumor that the Melvin CEO is getting a divorce. And I found out that when the rich know that they're at risk of having their assets seized, they use divorce strategically. So the wife will get half. Under divorce law, those assets that the wife gets, or whoever, they're protected. So Gabe Plotkin is the CEO's name. If this is true, again, rumor, I don't want to be spreading rumors. If it's true, he'll get half of his reported 300 million net worth, so he'll have 150. He probably pays for all this stuff. He gets his assets seized. Apparently, he's happily married to his wife. They have at least 2 children, maybe 4. I don't really know. I don't really care. It doesn't matter to me. If he goes to jail, he goes to jail. If he gets his assets seized, he gets his assets seized. Goes back to his wife. He's still a triple-digit millionaire. So he's doing all right. Very different from when normal people get divorced.
Why would those assets be protected?
Why would they what?
Why would they be protected?
Apparently, under divorce law, when you get divorced, those assets are protected. They belong to the wife in this situation, and it's untouchable.
That doesn't make any sense because they don't actually belong to her if they're not on the market. They belong to the people.
Right. So if he liquidates his portfolio and gives his wife half of it, in the divorce, I guess that's a way to launder that money and to protect it from being seized. Again, I'm not an expert. I'm an idiot. I do a lot of reading, and this is just the things that I've found so far. They're all breadcrumbs to follow for anybody listening that might be interested. You know, it doesn't prove anything. Like John was saying, these are like small probabilities that multiply into a smaller probability. I'm adding. To me, it adds up to being very suspicious. So that's me. But yeah.
So we're about at the hour and a half mark. Is there anything else you want to go over? I don't know how long you want. I don't know how much B-roll or whatever you want.
Yeah, there's a lot. I've been documenting a lot of this research on my private Discord. I'm just treating it as a journal. Pretty much all the guys from the gaming Discord have joined, but I think they're so tired of me only talking about GameStop that they've stopped paying attention, which I do not blame them.
So you said that you haven't been good about publishing this podcast.
Yeah.
Did you get any comments or anything on this?
No, I mean, getting traction on almost any social media these days is very difficult because the established ones, I don't want to say they suppress it, but yeah, they kind of suppress it. They really only promote things if you start buying ads or if it just somehow organically starts getting a lot of traction. But if I'm not putting it out there, I'm not like connected on social media or anything like that, then nobody sees it, and so that snowball never starts rolling. But now with Clubhouse and me being on Clubhouse all the time, and me actually gaining, a number of followers that like to hear my thoughts on things, I think there's potential there. So
yeah,
maybe this podcast will be the one that I actually start posting regularly off of. And I have a backlog of old podcasts that I can start publishing. So that's actually beneficial that I haven't posted things because algorithms on social media tend to favor regular posting. So if there are gaps, like the past month, we maybe recorded only 1 or 2 podcasts. We've just been busy. If this was a business, that would not fly. I would have to put out content to satisfy the algorithm. Otherwise, I'd put my channel at risk. So it's yeah.
So where are you publishing? Is it Spotify, right? Is that what it is?
I currently only YouTube, but I've been looking into Spotify.
Oh,
There's a lot of podcast platforms out there. I eventually want to post to all of them, but I want to figure out a way of doing it efficiently. Because currently I have to upload individually. I'm sure there are services out there that will simultaneously upload for you. And so
with YouTube, there's tons of videos out there that talk about the algorithm and stuff that I'm sure you've looked at or should look at.
I have looked at them, yes. And I'm most familiar with the YouTube algorithm. Yeah.
I get all that. I just think that from a practical perspective, I don't care if the algorithm is promoting your stuff if it's completely out of date, because all the stuff we're talking about is like time sensitive.
Yeah, that's a very good point. And that is historically true from our podcast.
Which was not the original vision.
That was not the original vision. It was supposed to be evergreen stuff that would last for a while.
Yeah, so this thing, it's like topical comedy, right? You can't do your bit in a year.
Yeah, exactly. Well, look, this week is supposed to be a pretty big week for GameStop. So maybe I'll post this tonight or tomorrow morning, and then it'll be very relevant for this week.
And see if you get some listeners or whatnot.
Yeah.
Anyway,
GameStop published an ad today on their social media. Caption: it's going to be a monster of a week. Monster Hunter Rise. It maybe has to do with the game coming out, Monster Hunter. Maybe they're sending us coded messages. That's the funny part. That's the interesting part. You know,
I don't know if
you can't say anything directly because of market manipulation allegations, SEC investigations. But Ryan Cohen is a very talented young man, and he's on the board of GameStop now. You got to think that he knows what's going on, and he's not happy about it, especially being such a large shareholder in the company. So, yeah, we'll see. The quarterly earnings report is on Tuesday. I'm pretty sure this is one of the most anticipated earnings reports in a long time. It's going to be very widely listened to.
Yeah, I expect them to report that they lost a crap ton of money.
So that's the interesting thing. I don't agree with that.
You have a brick and mortar store, right, which has to very, very, very quickly pivot to digital. Yeah. And digital game distribution is predominantly Steam, Epic, and
yeah.
And I don't like. I'm not a huge Gabe Newell fan.
Yeah.
But Steam is a monster that you need.
Mm-hmm.
I'm not even sure Bezos. I'm not sure Amazon, even if they pumped billions of dollars into it, could beat Steam.
It's it's the go-to.
It's right? Like first mover. Not only do they have first mover, their moat is like it's not just a moat; it's filled with landmines.
Yeah, it's an enormous moat. Yeah, so I don't know. We'll see.
Is it really that big a moat?
I think so.
Oh my god! Yeah,
so.
If Amazon says they're going to make Amazon Prime games, isn't everyone just going to say, "Okay, I'm going to publish on here too"?
It'll take some time, and that's the beauty of it, right? That's the battle. Maybe young people who don't know about Steam, they go to Amazon. But
the one thing I would say is that it's kind of like what Charlie Munger said last week, where he said, well, the one advantage Costco has over Amazon is that people believe Costco will always give them the best deal.
Yeah.
And people believe that equivalent of Steam. Steam has your best interest at heart. I'm not sure that the same can be said about Amazon.
Yeah.
Remember, Steam was created by gamers, for gamers. They haven't done any like questionable business practices like Epic Games has.
And their library
they haven't sold out like Blizzard has.
Library's enormous, sales all the time.
My criticism is I feel like they've stagnated to pretty much the same as they were.
I could agree with that.
I think I would agree with that too.
Yeah. I mean, I'm with you there, but I think it's really a money thing. If they can make the games cheaper, then people will go.
Yeah, but as far as the earnings report goes, John would have a lot more insight into this. I heard rumors that this earnings report talks about the previous quarter, not the one that just elapsed. Is that true? That can't be true.
It's more actually. It's not the.
It'd be some quarter end, right?
Yeah. So,
well, they can't.
We've seen indications that their in-store sales have been through the roof, and their online sales have also been through the roof. They sold out of all their PS5s. They sold out of all of their Xbox Series X's. They said that due to enormous volume, they were having trouble keeping up with all the orders. And even then, tons of people are reporting same-day deliveries.
So I would understand that. Well, first you said about the previous quarter. The previous quarter is October, November, December, right?
Yeah.
Okay, and that makes perfect sense that they would have really good sales because of the fact that these consoles were just released. I would expect all of the companies actually that sell these that sells this stuff to have their sales go through the roof. And because of that, it's kind of like a one-time thing, right? Because they also have to release forward guidance. You can't say, "Oh, we're always going to have this forever," because PS6 is going to be released tomorrow, right? That's not going to happen.
Right. And that's been the cyclical nature of
the
GameStop
holidays.
historically anyway.
Yeah, it's the holidays thing, and they can't be. It can't be an earnings report for January, February, March this quarter because
Quarter hasn't ended
over yet. They don't have all the numbers.
Yeah. Okay, that makes sense. Yeah, that does make sense. In which case, the quarterly earnings report after this one should be really good too, if all the stuff that I've been seeing is true. I don't know if it'll exceed the holiday buying season, but maybe. They got a lot.
I would expect so, because PS5 was actually very, very difficult to get a hold of. So Xbox Series X should push up the sales for October, November, December, with very, very few, very, very small percentages of sales being driven by PS5. And the PS5 really has only been widely available, in 2021. So you'd have the X's go down a little bit, and you'd have the PS5 start coming up.
Interesting. That's a good point.
Well, none of that should matter that much. It should be people, if they're looking at the gaming industry, is going to see this in general. Like, I don't think we have particularly unique insight on that. So it's about really whether they exceed expectations or say something else unusual.
Yeah.
Because Christmas happens every year.
Yep. So yeah, that is the GameStop story in a nutshell. A very long, large nutshell.
This is more reason to publish the content, because then you don't have to repeat yourself.
That's
you
exactly.
Can just say, listen to last week.
Yes, that was exactly my thought as well, because I've had to repeat myself a number of times at this point.
You've told the story better, if it means anything.
This time?
Yeah, it improves every time.
Yeah, it does. Well,
the clarity,
practice, but also more information.
The conclusion's the same, rather as good to me. But I think the storytelling and the thesis is there.
Yeah. Yep. So yeah, and there's breadcrumbs for people to follow if they want to. All the ETFs that have been shorted, you can check out the short interest on that. You can also check out how inconsistent short interest reporting is. So FINRA is always late, and by the time you get it, it's outdated. So you can't really trust the FINRA data, but it's a good place to start. You can check finviz.com. I use that sometimes. Other people like to look at Twitter and follow, Ortex or S3 Insights or whatever their company name is. They publish information on short interest, but it seems like right when the GameStop situation was happening at the end of January, they suddenly decided to change their formula for how it was calculated. They published some graphs that looked manipulated, that looked like they were misscaled. So that's misleading. And you have to think that there could be corruption involved when billions, if not trillions of dollars are at stake, spending millions to change the narrative is a cost of doing business. It's a no-brainer at that point. And that explains all the weird behavior on the internet, on Reddit, in the news stories and everything. The news stories, this I forgot to mention, Mike. 2 weeks ago, GameStop almost hit $350 a share. First of all, it was from January, it crashed down to $38, and everyone was saying that it was over. Forget GameStop. So then why did one day it go from $40 to $200 if it was over? Why did the timeline seem to work out for the failure to delivery time window? That's weird. Incidentally, it was February 24th. That was the same day where the Fed computer system went down for a few hours. And then as soon as it came back online, GameStop shot up. It's interesting that it happened on the same day. It's interesting that after their computer system went down, that the 7-year treasury auction was horrendous. And that's when people started talking about oh no, nobody wants U.S. Treasuries anymore. Inflation is here. Yields are through the roof.
I don't know if that's a conspiracy thing though, because
No. That's what I'm saying. It's like if the system was down and banks and other financial institutions couldn't transfer money to each other, maybe they just didn't have enough money for that auction, and that way, that's why the 7-year was so bad that year. Because subsequent auctions have been fine. The data gets published. It looks very healthy. I mean, granted, there's a shit ton of quantitative easing going on right now, but still. But anyway, GameStop hit almost 350, and then it flash crashed to 172 within minutes. It was right around the lunch break. And it's, from what I've heard, sometimes when shady shit happens, it always coincidentally happens at the lunch break when people are out to lunch. Does that mean anything? I don't know. It could. It's suspicious. 20 to 40 minutes before the flash crash even happened, MarketWatch and CNBC published articles saying that GameStop had just crashed 40%. So they either have a time machine or those articles were prepared for publication and they were told to publish it at around that time.
Wait. So about journalism now actually a lot of it isn't really published by a person that writes it.
Yeah.
Actually, it's automatically written.
Hang on. Yo, let me call you back. All right. Bye. Sorry about that.
So a lot of those, maybe not a lot, but a decent amount of those articles just are algorithmically generated, and someone just.
I understand, but why did they get that information so eerily accurate? 20 to 40 minutes before the event actually happened.
So you're saying that it was published before it happened?
Yes, 20 to 40 minutes before the event happened, news of the event was already published.
Is it 20 minutes with the time delay?
What time delay?
Well, when you look on like Yahoo Finance or something, there's a delay in the stock price. Right?
Oh, so yes. I'm talking about real time, not the delayed quotes.
I guess that's very interesting. I'm not saying
suspicious.
I ascribe to it being this weird conspiracy thing. More like I'm not sure, so I can't say.
Yeah, so I did a little digging into it, and again, all of this stuff sounds like conspiracy theory. But why did that happen? CNBC is contracted with News Corp. News Corp owns Wall Street Journal, MarketWatch, a couple others, Barron's, I think. Who owns News Corp? Fox owns News Corp. Who's on the board at Fox? Ann Diaz Griffin, Ken Griffin's ex-wife. Ken Griffin is the CEO of Citadel. Maybe there's something there. You know? It's too weird that these articles got these details so accurate 40 minutes before the event happened. CNBC then took that article down, republished basically the same exact article at the right time, but it happened a couple seconds, couple minutes after the flash crash. So then that lines up with what you were saying about algorithmically driven article publication. That makes sense. So yeah, either they have a time machine, or it's an enormous coincidence, or there's some
something needs to
explain
going
on there.
Something needs to explain.
Or we have the times wrong.
We do not have the times wrong. There are screenshots of this. They're online. I saw it happen myself. And so either I'm lying and these screenshots are photoshopped, or, it's another conspiracy, but on the other side, Reddit is conspiring to make it look like all these news agencies are, not trustworthy, when really they tell us the truth all the time, and everyone should pay attention to mainstream media because they never lie. I don't think so.
Well, if the Occam's razor, is it simpler for all these things to be conspiracies, or you just trying to get GameStop up so that you can make more money?
Yeah, that's a fair point. I am all in. I'm very publicly all in on it. Look, I've already made money on it. I could get out now, but everything that I've seen tells me that it hasn't even started yet. I very strongly believe that there's fraud going on here, and I do think that this thing will short squeeze. Plus, you guys know me. We've known each other for over 20 years. I'm not that type of person. I wouldn't lie to you guys. I would knowingly lie to you guys. And I think it's clear that I'm obsessed and I've done a lot of research. And I think you guys can tell that I'm being honest about this. So it makes no difference to me whether you buy GameStop stock or not. That goes for anybody that might be listening to this. It makes no difference to me because mathematically speaking, I think that we're already at the point where the hedge funds are fucked. People who are on the short side of this trade are fucked. And it's only a matter of time before things unwind. The only unknowns that I have are what other tricks do they have up their sleeves? What other illegal activities are they going to commit? And whether or not the government, the Fed, the Treasury, if they're going to step in. I don't know any of those things. But from a mathematical perspective, from what I've seen, there are too many counterfeit shares. Retail basically owns the entire float. And the hedge funds are bleeding. They're miserable. They're very stressed out. Like, if this was a game of poker, they have a terrible poker face. Probably the worst poker face I've ever seen. And regardless of poker face, the numbers that I've seen just tell me that GameStop is going to win. So
in terms of
I'm all in.
The hedge fund pinata, I don't really have sympathy for the hedge fund.
Yeah.
But
I have no sympathy for the hedge funds, especially not after 2008.
But it's not like black and white, because first, they've done good things in the past with short selling. Right? It was a hedge fund that revealed the Enron scandal.
Enron, yeah.
If Enron had gone on with their fraud, then it would have cost a lot more billions to everybody else. But there's a lot of investors, like institutional investors, pension funds that are invested in hedge funds. So if these hedge funds just all crash, then we're going to have a lot of retirees with.
I know.
Like to lose their pensions. And that's
why I've been making noise about it. Because if the facts are being hidden from the public, then they don't have the opportunity to position themselves in a way that shields them from a market crash if it does happen.
That's true. I'm not saying that as a defense. That.
No, I understand, and I do think that's the big reason why they just can't come out and tell the truth, and they can't just come out and unwind this thing right away, because so many people's pensions and retirement funds are at stake. The economy is not doing well, right? Unemployment is enormous. Long-term unemployment is already at the level of the 2008 financial crisis, and it's only going up. It's parabolic. Coronavirus really fucked us up. It really, really fucked us up. And it hasn't been a year yet since the crash or correction, whatever you want to call it, from last year. March 24th, so in a couple days, that was the first green day in the market since then. And so if anybody's invested, they at least need to wait until the 25th for long-term capital gains. So there could be tax implications as a reason for why things are taking this long. Maybe, right? People also do sell before filing taxes, to capture gains. But obviously, you would rather have long-term capital gains than short-term capital gains. Also, it was recently announced that the tax filing date got pushed out a month. So.
Yeah, but if you sell now, your profits will be booked next year.
Yeah, you're right. But
still, I agree that people obviously want long-term capital gains versus short-term. Yeah. And I also agree that the market is kind of disconnected from the economic reality at this time. Yeah. But what a lot of people will say is that the market is a leading indicator. I don't know if it's that good of a leading indicator.
Yeah. I think the market is not a leading indicator, at least this year. I think we're in a giant bubble. And actually, I think it has room to inflate even more.
Yeah, it's GameStop thing about countries now propping up markets because through selling bonds, essentially, or through printing money, which is. And I also believe that we're in a bubble. I agree.
Yeah, we're in an enormous bubble. I think as crazy as it is, and as crazy as this sounds, it's got more room to grow. But this GameStop thing, at some point, it needs to be unwound. It has the potential to cause a large correction in the market. But after that, maybe it'll rebound. But looking longer term, I don't know. We have so much unemployment that it's highly concerning. Do we enter a phase of Japanification? I don't know.
From the unwinding of the fallout from this GameStop situation, the fallout is that there's a reset to the fundamentals and that the market becomes less bubbly.
Yeah.
I feel that would be a good thing. I'm not sure.
I agree.
But I think it would be a good thing.
I also think that this bubble is propped up by fiscal policy, money printing, and leverage. Mortgage forbearance, for instance. Mortgage forbearance got extended another 6 months, right? Which means that if anybody took that offer and they haven't been paying mortgages, there's a chance that they put it into the stock market. All of the CARES Act provisions and all the other stimulus provisions since then, right? Stimulus checks, unemployment checks, and things like that. A lot of that money could have found its way into the stock market. I mean, a lot of it went to paying down debt, right? Which, if you know anything about money and how money is created, it's debt. It's all debt. We live in a debt-based society. So when stimulus checks go to pay down debt, you're actually destroying money. This is a complicated concept that a lot of people may not understand, but I encourage people to look into
it. I think, we know that the recovery, or quote unquote, the recovery from the pandemic has been disproportionate, right? So people that were higher income were a lot less affected than those people that were lower income, which is very sad, but that's that we built in America, that is the case.
Yeah.
So then you have the government that's giving money to people to help them, which is a good thing, right? It's a good. I think everybody agrees that's a good thing. The problem becomes when you have people that will go to pay down debt versus using it to inject into the economy, right? If you have somebody that's unemployed, they don't have any cash inflow, and they're going to be using that money to buy food for their kids, right, and pay rent and stuff, then that's actually good because you're essentially getting a 1 times X increase in the money flow in the economy when you're just injecting that money into the economy.
Yeah.
And you have the people that aren't really worried about that have jobs, they're not unemployed, they're getting this money anyway. And yes, a portion of them will use that money to inject in the economy. Right. But there's going to be another portion that, number one, put it in the bank, right, or use it to pay down debt, which really does not help the economy.
It doesn't.
So you have this, I think they've talked about it where it's like diminishing returns for the more money you give people, because eventually it's, you have more and more money that not getting injected back to the economy. Now, I think if they did you do a better job of targeting who gets the money, then maybe people. I guess the policymakers are really hoping that people go out and spend this money, and that's just that's just not going to be the case. 100% of people do.
Yeah. So that brings us to banking and loans. How do you stimulate an economy? You have to get people to borrow money, right? Whether that's for a personal loan or a car loan or a mortgage or a business loan, whatever.
Not necessarily borrow,
the economy.
But to spend money.
Well, yeah, but where does money come from? It gets created when a loan is taken out. That is the whole definition of a debt-based society, right?
Yeah, I guess it's not always direct though, right? Because it can be a paycheck.
Yeah, but that money also comes from somewhere.
Right. So then there's there's a chain, right? Because money from a paycheck is through providing a service or selling some sort of good. The person that bought that good may have been providing a service or selling good, and the person that bought that one could be doing the same thing. So keep going down.
Absolutely. At the root of it, people have to be creating goods and services to sell to other people. But to pay for that stuff, to even start those businesses, the reality is that you're probably going to have to take out a loan. And there's nothing wrong with that per se. It's just the way it is. The issue is that if you look at the loan data, banks are not lending. They're not lending. What is it called? The standards have been tightened up so much that most people don't qualify for a loan. If you look at mortgage data, fewer people are taking out loans now. It's dropped a lot.
Yeah, and the thing, especially the mortgage thing, that really kind of annoys me because when we're looking to purchase a house, and I'm not really sure whether we're going to be doing that anymore, or we're just kind of put that off. But housing prices are continuing to increase, and people are now saying, experts are now saying that they're not sure that it's because of housing supply anymore. It's because that there's been so much money being pumped into, being printed, right? That people are able to get more access to loans, and that's what's pumping up prices, which is stupid.
The data doesn't show that people are getting more loans, though. Maybe in your area they might be. I don't know. I'd have to double check. But at the end of the day, it's still not my area of expertise. I just know what other experts have said. And
what you're saying about less people getting loans, then is that in the past few months, or is that over the past year?
It's been a pattern over the past year where mortgage applications have been decreasing and mortgage approvals have also been decreasing, but dramatically more so.
So if mortgage approvals were decreasing and less homes are being sold, then shouldn't the prices go down?
So they can either go up because of lack of inventory, because there's still some demand, or they could be going down to try to find buyers. So far, what we've seen is that very recently it's been going down a little bit, but overall, over the past year, it's been going up because low inventory means that eligible buyers are competing for the same properties. So in most places in America, I think it's been going up. In some specific areas, it's been going down. Like Manhattan, property values have fallen, but owners are not willing to sell it for a loss. So it's a complicated situation. The point is that for the vast majority of people, they're going to have to take out a loan, and banks aren't lending. And if they're not lending, that means money is not being created. The money being printed, quote unquote printed, most of it is going towards quantitative easing and other government programs. It doesn't actually make it out into the real world economy. People like you and me. Right? So the only thing that is making it to us is unemployment checks and stimulus checks. And I don't think that makes up for the economic loss of the widespread unemployment and loss in productivity from coronavirus.
Yeah, that's for sure.
Prices going up is probably attributable to a disruption of supply chains. So lumber prices, that's a good pulse on the housing market. Lumber prices are 4 to 5 times more expensive than what they historically were. So it's much more expensive to build a home now. The cost of a 2x4 used to be under $2 for like an 8-foot length or a 6-foot length of a 2x4, and it's now over $8 for the same 2x4.
Well, yeah, well, I know that there was a lumber shortage recently.
Yeah.
But I don't know it's that bad. It's pretty bad.
Yeah, it's very bad. The cost of sheet goods is ridiculous. OSB, oriented strand board, one of the shittiest but ubiquitous sheet goods.
If we're not cutting down as many trees, shouldn't oxygen be cheaper?
Yeah, I mean, I think there were some good environmental side effects from quarantine, but not enough to offset global warming.
I gotta head out actually.
All right, man. It was good talking to you.
Yeah,
Obviously, I have to talk about this for weeks, but I think I got most of it down.
I don't know how often I'll be on here, but if your listeners want me to be back on, then I'll be back on.
Sounds good, man. Tell Rachel I said hi. Hope you guys are doing all right.
Take it easy, guys.
Take it easy.
Peace.
Yeah.